All right, if you're even thinking about buying your first home in Canada, you need to listen up. This is a huge warning. There's a hidden system that basically forces you to gamble your entire financial future every 5 years, and it absolutely slashes how much house you can actually afford. Let's break down exactly how it works. Okay, first things first, you have to grasp this one fundamental fact. The Canadian system is pretty unique and not really in a good way for homeowners. See, you cannot lock in your mortgage rate for the whole life of the loan. In the US, for example, you can get a 30-year fixed rate. Your payment is set in stone for 3 decades. But in Canada, nope. You're stuck on a 5-year cycle, which throws this massive wrench of uncertainty into your financial life. So this whole mandatory renewal thing, it creates this massive financial risk for you. Every 5 years, like clockwork, you are forced right back to the negotiating table with the bank, and you have to accept whatever the interest rates are that day, whether they've doubled, tripled, or even worse. This isn't a choice, It's just a built-in requirement of the entire system. And this right here shows the trap that's been set for so many people. You see, during the pandemic, rates just plummeted to these historic lows. Millions of Canadians jumped into the market, and they locked in these incredible rates, around 1.5%. The problem? Those rates were only temporary, and now a massive wave of those 5-year renewals is coming right over the horizon. And this is where the rubber really meets the road. This is what payment shock actually looks like. Imagine your payment was a manageable $2,400 a month. Well, at renewal, you're suddenly looking at a new bill for $3,850. Annually, that's over $17,000 more, just to keep the exact same house. It's a brutal reality check. And look, this isn't some niche problem affecting just a few people. The scale here is enormous. Over the next couple of years, we're talking about more than 3.4 million mortgages coming up for renewal, and most of them were signed at those rock-bottom rates. It's like a financial cliff that millions of households are marching towards. Okay, so that's the risk 5 years down the line. But there's another hurdle, one that shrinks your budget right now, before you even start looking at houses. And it's called the mortgage stress test. So what exactly is this thing? Well, to put it simply, it's a rule that comes straight from Canada's banking regulator. It means you don't just have to qualify for the mortgage rate the bank is actually offering you, you have to prove that you can afford payments at a much higher, totally hypothetical rate. Let's walk through how this actually works. Say a bank offers you a pretty good rate, maybe 5.5%. Sounds great, right? Well, the government then steps in and forces the bank to add this buffer of about 2 percentage points. So you don't qualify based on the 5.5% you'll actually be paying. You have to prove that your income can handle payments at a fictional 7.5% rate. And here's the biggest flaw in the whole system. The stress test is based on a single snapshot of your finances the day you apply. It doesn't think about real life, Having a kid, maybe one of you changes careers, you get hit with unexpected bills. It's a static test for a life that is anything but static. And that becomes a huge problem when it's time to renew. Okay, so that's the theory, but what does this actually do to your wallet? Let's look at how the stress test directly shrinks the budget you have for a home. The impact is, well, it's staggering. Just look at the gap this creates in a market like Toronto. You could have a family with a solid income, say $120,000 a year. After the stress test, they might only qualify for a home worth around $550,000, but the average home price there is over $1 million. The system is basically qualifying you for a home that doesn't even exist in many of our major cities. If you want to boil it all down to one single number, here it is, 25%. The stress test, on average, cuts a buyer's purchasing power by about a quarter. Just gone, right off the top of your budget. All right, so I know this sounds pretty bleak. The system clearly has some major challenges for buyers, but understanding these rules, that's the first step to protecting yourself. Knowledge really is your best defense here, so let's walk through exactly what you need to remember. Let's boil it all down to the key takeaways. Number 1, that rate they test you on, it's not your real rate. Number 2, your actual home buying budget is being artificially squeezed. And number 3, and this is the big one, that 5-year renewal isn't a possibility, it's a guarantee. You have to plan for your payments to jump. So what can you actually do about all this? Well, you've got to be proactive. Don't wait for the bank. Months before your renewal is up, start shopping around for better rates. And please, talk to a mortgage broker. They see way more options than your single bank does. And whatever you do, never just automatically sign the first renewal offer your bank mails you. It's almost guaranteed not to be their best deal. And hey, if things are really getting tight, you can ask about extending your amortization. That's just stretching out the life of the loan to bring those monthly payments down. You might be wondering, why on earth is the system set up like this? Well, the official line is that it's all to maintain financial stability. But this quote really gets to the heart of it. The system isn't broken. It's actually working exactly as it was designed to. It's designed to protect the banks from risk, which, you have to understand, is not the same thing as protecting you from financial hardship. So all of this brings us to one final, really crucial question for you. Now that you know about this mandatory 5-year gamble, and you understand how your purchasing power is being artificially limited from day one, how does that change the way you approach buying a home in Canada? That's something every single potential buyer really, really needs to think about.